Taxation did not begin as policy. It began as power. Long before spreadsheets, tax codes, or withholding forms, rulers discovered a simple truth: authority becomes leading when it can extract resources reliably. The first taxes were not debated, justified, or optimized. They were demanded. Grain, livestock, labor, silver, whatever sustained the state, was taken in proportion not to fairness, but to force. Taxation, in its earliest form, was the economic expression of dominance. In ancient civilizations, taxes were indistinguishable from tribute. In Mesopotamia, farmers surrendered a portion of their harvest to temples and palaces that claimed divine authority. In Egypt, the Nile's flooding determined yields, and scribes followed the water, recalculating what peasants owed Pharaoh. In these societies, taxation was not merely revenue, it was cosmology. Paying tax affirmed order. Refusing it challenged the gods. As empires expanded, taxation evolved from extraction into administration. Rome perfected this transition. Taxes funded legions, roads, aqueducts, and bureaucracy. But Rome also revealed taxation's fragility. Excessive burdens sparked evasion, corruption, and revolt. Tax farming enriched intermediaries while alienating provinces. By the late Empire, fiscal pressure strangled productivity. Rome did not fall solely to barbarians. It collapsed under the weight of a system that could no longer extract without destroying what it extracted from. The medieval world retreated from centralized taxation. Feudalism fragmented authority. Lords extracted rents rather than taxes. Obligations were personal, not monetary. Kings survived on domain revenues, and occasional levies often negotiated rather than imposed. This limitation mattered. States without reliable taxation could not sustain standing armies or professional administrations. Power remained local. Growth was slow. War was intermittent, but devastating. Everything changed when warfare changed. The rise of gunpowder warfare in early modern Europe made medieval finance obsolete. Cannons, ships, and mercenary armies were expensive. Occasional levies no longer sufficed. States that failed to tax systematically fell behind or collapsed. Those that succeeded transformed taxation into an instrument of survival. England's story is instructive. Repeated wars forced the Crown to negotiate taxation with Parliament. This bargaining produced something unprecedented: consent-based taxation. Taxes were still resented, but they were legitimized through representation. No taxation without representation was not merely a slogan, it was a financial innovation. It aligned revenue extraction with political accountability. Over time, this bargain produced credibility, lower borrowing costs, and institutional stability. Elsewhere, absolutist states taxed without consent. France squeezed peasants while exempting nobles. The result was chronic fiscal crisis. When reform finally came, it came too late. The French Revolution exploded not only from hunger and inequality, but from a tax system that had lost legitimacy. Taxation, once a tool of order, became the spark of upheaval. The Industrial Revolution transformed taxation again. As economies monetized and incomes diversified, states faced a new problem: how to tax a society no longer rooted in land alone. Customs duties and excise taxes on salt, tobacco, alcohol dominated early industrial finance. They were easy to collect and hard to avoid. But they were regressive, falling disproportionately on the poor. Social tension grew alongside factories. The modern income tax emerged not from ideology, but from necessity. Wars, especially total wars, required unprecedented revenue. Britain introduced income tax during the Napoleonic Wars as a temporary measure. It was controversial, intrusive, and hated. It was also effective. Though repealed after the war, it returned permanently decades later. Once states discovered they could tax income they never forgot. Income taxation marked a profound shift in the relationship between citizen and state. It required disclosure, measurement, trust. The state now claimed a share not only of goods, but of earnings themselves. This required legitimacy beyond force. It required law administration and consent, however imperfect. The 20th century completed taxation's transformation. World wars expanded fiscal capacity massively. Progressive taxation emerged as both revenue tool and social policy. Tax systems were used to redistribute, stabilize, and shape behavior. Governments no longer merely funded armies and courts. They funded welfare states, infrastructure education, and healthcare. Taxation became the price of civilization and its most visible burden. Yet resentment never disappeared. Tax revolts punctuated history. From the Boston Tea Party to modern anti-tax movements, resistance followed extraction. The difference was framing. Taxes were no longer challenged as theft by rulers alone, but as inefficiency, unfairness, or overreach. Debate replaced rebellion most of the time. What history makes clear is that taxation evolves with the state itself. Weak states tax crudely. Strong states tax broadly. Legitimate states tax predictably. Illegitimate states tax desperately. Every tax code is a mirror of political order, economic structure, and social trust. Standing in the modern world surrounded by complex tax systems, it is easy to forget how radical they are. The idea that millions of citizens voluntarily report income to a central authority would have astonished ancient rulers. This compliance is not enforced solely by fear. It rests on institutions, norms, and belief that taxes fund something collectively valuable. But this belief is fragile. As globalization erodes tax bases, as capital becomes mobile, as inequality widens the old bargain strain. Corporations shift profits. Wealth escapes borders. States respond with complexity enforcement and rhetoric. The ancient tension returns. How much can be taken without breaking trust? The history of taxation is therefore not a story of rates and brackets. It is a story of power learning restraint, of extraction, seeking legitimacy of states, discovering that revenue without consent is temporary, but consent without fairness is brittle. Every era rewrites the tax contract according to its fears and priorities, and as modern societies debate, wealth taxes, digital taxes, and global minimums, they are participating in, arrive when the tax contract between state and citizen is renegotiated under pressure, as it always is when economies change faster than institutions. For the story of taxation does not end with the invention of income tax. It intensifies. In the late 20th and early 21st centuries, taxation entered its most complex phase. Globalization stretched tax systems designed for national economies beyond their limits. Capital became mobile, while tax authorities remained territorial. Corporations learned to arbitrage jurisdictions. Profits appeared in places where little economic activity occurred. Individuals with means discovered that borders were porous for wealth, but rigid for labor. The perception took hold that the tax burden was no longer shared proportionately. States responded with layers of complexity. Codes thickened. Enforcement intensified. Loopholes multiplied alongside regulations meant to close them. What began as an effort to preserve fairness often produced opacity instead. Compliance costs rose. Trust eroded. Taxation, once framed as civic duty, increasingly felt like a strategic game between governments and taxpayers. At the same time, expectations of the state expanded. Citizens demanded security healthcare education infrastructure and protection from economic shocks. The welfare state, born in the 20th century, matured into a permanent fixture. Financing it required steady revenue. Yet political resistance to higher visible taxes grew. The result was a shift toward indirect taxation, borrowing, and hidden costs, deferring the tax burden rather than resolving it. This tension is not new. History shows that when states cannot tax openly, they tax indirectly through inflation debt or financial repression. These methods obscure cost, but corrode trust over time. Modern debates over deficits, monetary expansion, and wealth taxes are echoes of ancient dilemmas faced by empires that exhausted conventional extraction. The future of taxation now hinges on legitimacy rather than technique. Digital economies challenge traditional definitions of income and location. Automation threatens labor tax bases. Demographics strain pay-as-you-go systems. Climate policy demands new forms of taxation to price externalities. Each challenge forces societies to answer the same fundamental question in new language: who should pay how much and for what purpose? History offers a clear warning. Tax systems collapse, not when rates are high, but when fairness is doubted. The French monarchy survived high taxes for decades until exemptions delegitimized them. Rome taxed relentlessly until productivity collapsed. Modern states are no different. Complexity can conceal injustice for a time, but not indefinitely. The enduring lesson of taxation's long history is therefore one of balance. Extraction must be matched by visible benefit. Enforcement must be matched by legitimacy. Efficiency must be matched by equity. When these balances hold, taxation becomes background noise. When they break, it becomes a catalyst. If this journey through the history of taxation changed how you think about taxes, not as mere policy, but as a reflection of power and trust, share what resonated with you. And if you want to continue exploring how financial systems evolve under pressure, follow the channel and stay with this story, because the history of taxation is ultimately the history of how societies decide to pay for themselves. And that decision, once questioned, reshapes everything that follows. An argument as old as civilization itself, how to fund collective order without undermining the very productivity that makes it possible. An argument that never truly ends. Only shifts form an argument whose next chapter will be written not only in law books, but in public trust, political compromise, and the willingness of citizens to continue paying for systems they believe still serve them. A willingness that history suggests can evaporate quietly, and then, all at once, a moment when taxation once again moves from background infrastructure to front-page conflict. A moment that will,